This section takes a brief look at unearned revenues again. Whenever a business receives cash from customers before earning the revenues, that cash they receive is a liability to the business. They have collected cash from customers, but they have not provided a service. Whenever the cash is received, the company will debit cash because cash just got increased and credit unearned revenue. Unearned revenue is a liability in the books of accounting for a company. Unearned revenue will be reported under current liabilities in your balance sheet. Whenever a company earns the revenue, the company will do an adjusting entry to record the earned portion of that unearned revenue. Let's take a look at an example. It says on November 1st, 2012, People Magazine received $24 for a 12-month subscription. People Magazine received this money without earning their revenue. They have not provided a product yet to their customers. They have not shipped off any magazines yet. On the date of receipt, what People Magazine will do is they will debit cash for the amount of money received and credit unearned revenue. Unearned revenue is a liability to People Magazine. They owe $24 worth of magazines to their customer. December 31st, 2012 is this company's year end. Now the question is, have they earned any of that unearned revenue? Yes, they have, because they received this money on November 1st. They would have shipped off November magazine and they would have shipped off magazine for the month of December. So they've earned 2 months worth of revenue. Let's calculate and see how much that is. First, we need to calculate how much is our revenue per month. We do that by taking our $24 that we receive, divide by 12. The reason we divide by 12 was that it's because that $24 was for a 12-month subscription. That gives us revenue per month of $2. We've earned 2 months of revenue, so we multiply 2 by 2, giving us $4 of earned revenue. What do we do for that $4? What we're going to do is we're going to debit unearned revenue and credit revenue for that $4. The $4 represents the revenue earned between November 1st and December 31st. Your unearned revenue now has an ending balance of $20. That $20, remember, is a liability and it will be shown as a current liability in your balance sheet. The $4 of earned revenue will be shown in your income statement under revenue.